I am Gali Sarish on behalf of BSE IPF. This is the third video of Union Budget series. In this particular video, we would see the budget details which is being provided or presented by Finance Minister on 1st February 2021. So there are various things that are being highlighted here. So we would go through one by one and understand what each and every detail is being provided to us. So this is the data. As we have seen in the earlier video, there are revenue receipts and capital receipts. So under revenue receipts, we have seen income for a central government is through tax revenue and non-tax revenue. So for 2019-20, these are the actual numbers. So the actual number was 16,84,000 in crores. The value is in crores. So the previous budget, the estimation was they would get approximately 20 lakhs 20,000 crores. So this was the budget estimate, but in this budget this estimation has been revised, and they have presented a number almost to 25% less than the previous budget estimations. Say actually these are still estimates, because for a simple reason, the financial year has not ended. As I told you earlier, for India, current financial year is from 1st April to 31st March. This is one thing that we have to understand. So 25% of income has been reduced or received less by government for a simple reason, because this was a pandemic year. People were not able to incomes have reduced, business incomes have reduced, your personal incomes have reduced. For that reason, the revenues have reduced, both under tax revenue and non-tax revenue category. So almost 25% reduction we are seeing for this particular till date, but the numbers would definitely increase for next financial year. That is what budget is being estimating. So they are assuming that next financial year the revenues would increase. So the important thing is that unless the revenues are increasing in the form receipts are increasing in the form of revenues as well as capital, if the receipts doesn't increase, then it's a cause of concern for a government, because this amount would be utilized for both revenue expenditure as well as for capital expenditure. So in this particular thing, you can see capital receipts have also increased. Recovery of loan, it has reduced. Other receipts, it has drastically come down. Borrowings and other capitals, so they have paid. So borrowings and capitals have increased for them. So this is become a big issue for government, and that's why they have highlighted this number in the form of fiscal deficit. We would see those terminologies in our next video, but at this point of time, what they have suggested is that due to this pandemic situation, we have borrowed money from the market, because it is the government responsibility to revive the economy and make it a growth economy. So the numbers what they have suggested is that we have borrowed money. Previous year our borrowing estimation was near about 8 lakh crores. Now it is 18 lakh crores. So they have borrowed 10 lakh crores more from the market. The estimation has been revised and now it is 18 lakhs. but the number which they are estimating for next financial year is that they are telling that we would reduce this borrowing to 15 lakh crores for next financial year. So even though the expenditures have increased, the borrowing has increased, they are suggesting or telling to the market is that we have borrowed this money for the revival of the economy, but we would borrow less for next financial year. So this is a good sign for any economy. So that is the important thing that we can take from this particular budget. So collectively, if I look into revenue and capital receipts, so my capital receipts revised amount has increased due to my borrowings from the market. So the number has increased. Along with this, my expenditure, what are my expenditures? So there are different expenditures for government, because they have to give subsidies, they have to give different aids, they have to support the public, and they have to support businesses. So for that they have to give some benefits to the organizations. So for that they have seen that it's a revenue. In the revenue account they have shown that from 26 lakhs crores the number has increased to 30 lakh crores. The interest payment, though, for the borrowing, whichever amount for central government, they are borrowing money for their requirements. So once they are borrowing money, they have also, or they are also in a position to repay it. So the repayment part, they are telling that this year we were assuming that we would pay almost 7 lakhs, but due to the current situation we have paid only 6 lakhs 92,000 crores, but for next financial year we would pay more than what we have done. So they have estimated they would pay near about 8 lakh crores. So few grants have been provided, so the grants expenditure has increased. Capital account expenditures have increased. So all in all, for this particular budget, as an individual, what I can understand is that because of this pandemic situation, revenues has come down, taxes collected by central government has come down, capital receipts have increased because government has borrowed from the market, and expenditure has increased because it is the responsibility of central government, and they have provided various schemes to generate cash flows in the market and revive the income cash flows for individual person and as well as for the corporate organizations. So for this particular videos, I guess you have understood what are revenue receipts, what are capital receipts, and how this particular budget has provided the numbers, and based on that we would see how these numbers have projected into various deficits. So there are a number of deficits. We would understand the definition of the deficit and what is the impact of that deficit to the Indian economy. Thank you once again.